What a wild year it's been so far. The Dow hit all-time highs back in February, the S&P 500, the Nasdaq, gold, and Bitcoin just hit all-time highs this past week, and all of that sounds amazing if you're invested in either of those, but what about the real estate market? What about housing? What about if you're looking to buy or sell? And what about inflation? Well, that's what I'm going to cover in this video. I'm going to go over what I'm seeing in the market. I'm going to go over what Jerome Powell just said on Capitol Hill so you can determine what you should do if you're considering making a move. So let's just jump right into it. But first, 90% of you watching are not subscribed to my channel, so if you get any value from these videos, make sure to hit that subscribe button so more people just like you find this information. All right, so if you're a home buyer, Jerome Powell probably just stepped on your dreams of lower interest rates in your future, because last week on Capitol Hill, he was saying that the Fed is not quite ready to start cutting their benchmark rate, and that's because inflation is still trending higher than what they'd like to see in order to do that. They want to see inflation trending sustainably towards 2% year over year. And right now it's just over 3% at 3.1%, roughly 3.09, depending on where you look. And that's not good enough for them. They don't think that that's good enough to start cutting rates. They're worried they'll do it too early and cause inflation to spike again. So if you were looking for those lower mortgage interest rates, it's looking like we're going to have to wait until early summer, maybe midsummer, to start seeing any improvement in that area. Now, that's not to say that something can't happen sooner to cause rates to drop lower than they are right now. And at the time of this video, we're floating right around 7%. But even though the rates are on hold, kind of holding steady, the housing market is not. So let me talk about what I'm seeing in the market right now. And the first thing I'm seeing is a huge spike in buyer demand right now. And I think that's a mixture of two things. I think first, it's the spring market hitting. When warm weather starts to hit, a ton of people want to be out shopping for homes. But at the same time, I think another factor of that is that people are no longer scared of these interest rates, and it's starting to become the norm for them. The idea of 2 and 3% mortgage rates are so far in the back of people's minds now that it's not even a possibility. In fact, 5% interest rates seem amazing to those that are shopping right now in the 7% range. So they're used to the 6s and 7s, and because of that, they're out in full force in the spring market. And because of that increase in demand and the low inventory that has not improved for the past year or more, we're seeing more multiple offer situations again, and we're seeing people dropping inspection contingencies again. We're seeing people offer things like covering appraisal gaps, where if the purchase price is higher than what the appraised value is, they're going to cover the difference in cash. We're seeing a lot of terms that are very, very competitive in this market, but it's not all across the board. I'm seeing the homes that are well priced, nicely updated, and with really great marketing selling just fine with multiple offers. But for those people that are overpricing their homes even a little bit in this market, they're having a rough time selling. They're going to be on for more than just 1 or 2 weekends. And because of that, they're going to get lowball offers with terms that don't suit them as sellers. But as a buyer, this is a great opportunity for you because so many sellers have overinflated in their minds what their homes are worth. And in this market, that is not a good idea. So you as the buyer have the upper hand in that situation and can go into those with offers that favor you more than the sellers. But homeowners are not the only ones overpricing their listings. I'm also seeing new construction builders that are making significant price reductions right now. And depending on the area, I've seen up to $60,000 in closing cost credits for certain new construction communities. Where on the other hand, some builders are offering nearly nothing for credits because they've planned ahead of time. They didn't overextend and didn't overprice. And the big question that so many of you have right now is, should I buy a house right now with home prices as inflated as they are and the market so iffy? Is it a good time to buy? What if there's a crash? And I have 2 questions that should help you determine whether it's the right time for you to buy. The first is, think about the market right now and ask yourself, if the rates do drop, what's going to happen to the housing market? And second, if I look back on this time 10 years from now, would I have wished that I bought a house in this area? If you ask those 2 questions, that should help you clarify whether or not right now is a good time for you to buy. And on top of that, you should always be financially ready. Don't buy a house because of market conditions. It's the worst thing to do, is try to time the market. Buy when it's right for you in an area that you really want to be in. And I always think that you should have a long-term mindset. So I always think you should invest in the long term for a house, 5 years or more. And that's kind of the safe zone if you're worried about market corrections or fluctuations. At least 5 years in a house should get you past that. And of course, we never know when a black swan incident like COVID is going to happen and how exactly it's going to affect the markets. That's the nature of a black swan incident, is you can't predict them. But if you look at the data that we have in hand right now, it indicates higher housing prices, higher buyer demand, low inventory for a significant period of time. So use that to help you make your decision. Now, one thing to point out is if you're considering moving to Maryland, which many of you watching my channel are, that Maryland is a very recession-resistant state. Being so close to DC with so many federal government jobs, state government jobs, and the lowest unemployment rate in the entire country, we are one of the best poised states to handle any kind of black swan incidents, any major national crisis. Maryland is one of the best places to possibly live if that happens. And if you are considering moving here and you're wondering where are the best places to live, or you have questions about a certain area, how the market is there, that is what I'm here for. I am happy to help you. My information is listed below. You can also reach me by going into the link in the description or in the caption and clicking on that to schedule a one-on-one consultation with me. I'll get a plan together for you and your move. And as always, if you like this video, make sure to like and subscribe so you stay up to date on all of my videos about moving to Maryland.